Are we currently in the biggest bubble and a bull trap ever? Or we're actually on our way to all-time highs very soon? Well, stay tuned because in this weekly analysis, we're gonna go over everything that you need to know to get yourself ready for the markets and make some money. Hello everyone and welcome back. My name is Dan and as always I'm bringing you the best weekly analysis there is out there for crypto markets and also stock market. I'm going to be covering everything, my opinion on what's going to happen the next week and how can you use it to your advantage and how can you benefit to make some money, right? So you've seen so many things that is happening at the moment, like Zuckerberg wants to fight Elon Musk, AI hype is at its peak and all these kind of things. Does that actually show us that we're at the peak at the moment and that we really need to cleanse the markets a bit, that we need to chill down, that we need to go back to the, starting point? Let's see. I'm not sure, but to me, we're a little bit too optimistic in everything that's happening in the world with all these things, with all the uncertainties. We're still not recovered fully even from COVID, let alone from all the other things that are happening, the war, the supply chain issues and all this stuff. So I really do believe that the markets are a little bit overly too optimistic and I see these small signs everywhere. So I do believe that we have, and I've been talking about it for a while, I do believe that we're going to have a cool down period incoming, maybe this year, later on this year when they want the recession to happen. But anyways, without further ado, let's head to the PC and as always, let's start with the Nasdaq 100 weekly analysis. So guys, as you can see, I just added more lines. I didn't remove any of the lines, so to make it more fun for you, right? To make it look like a spider's web. Weekly analysis on the Nasdaq 100. As I already told you, we are slowly creating double top. So is this it? Is this the momentum where you should be worried and where you should exit the markets, take your profits if you have any, and just wait or just start shorting the market? Well, let me just zoom in on a daily chart to see what's happening on a daily chart. So I don't want to be, again, that kind of guru who's always saying, I told you. But again, I told you. Did I say in the last video? And by the way, if you haven't seen it, make sure to have a look and follow it because I do these weekly follow-ups and just add on the previous video, right? So you need to be in line with my thoughts, what I expect from the market. Again, back to the topic. I told you so. I said that we're gonna create a double top and we are creating a double top. But guys, this does not look that bearish as it may seem, okay? Let me just zoom in on a 4-hour chart. So this, yes, does look like a double top. But then again, on the other hand, it might look, actually let me zoom out back on a daily chart. Then again, it could easily look something like a squeezing triangle, right? Let me just remove these EMAs so we can actually see something over here. So look at this, guys. So this over here, this right over here is a typical squeezing triangle, all right? Squeezing triangle. So if we manage to go back into this area, they usually break down to the upside, all right? And that means that we would be continuing our momentum to the upside. At least that's one of the options that I see. However, as I already talked in the previous videos, I really do believe that this is not going to be a squeezing triangle. I just gave you an option, just so you know what can actually happen in the market. But I really do believe that this is a pattern called double top, all right? So how does double top work? Let me just explain you the concept of how the smart money or big institutions are looking at it. Markets are a game of liquidity, okay? So the markets are a game of moving money around. Now, we created a new high, let's say, on the Nasdaq. And then they started exiting the markets, the big money, all right? So they started exiting the markets. Now, as I already told you in the previous videos, then they create a fake pump to the upside, okay? Which we had here to trap as much retail sellers who are thinking, oh, this was just a pullback. Now we're going back to all-time highs, all right? Then they start buying, add cash, liquidity to the market, okay? We come back here and then the big players, what do? They use you as an exit liquidity. they start liquidating their positions again. And I really think that this is what's happening. They're using us or the retail traders as exit liquidity just to go and finally crash us somewhere around, as I already told you, 14,200 or maybe even lower. Okay, so you need to pay attention to that. And as I already told you, yes, this might look or might also be seen from the positive side, but look at this huge wick that we had on Friday. So Friday was like a nice, actually it wasn't a nice day. I was about to say nice day, but it wasn't a nice day. The price action was actually quite bad, to be honest. Let me just zoom in on 1 hour chart. Look at this. So the market opened, went up, then after jobs data went down, then it went up, then went down, then when finally up we pumped, and then at around I think, what was it, it was a 9 o'clock in Abu Dhabi time, boom, we just crashed all the way down until the market closed. So basically all this is telling me, let's go back on a daily chart, is telling me that we are going to reverse. And I do expect from this point onwards that we continue the reversal at least back to around 14,900 area. So what I will be oriented next week on Nasdaq, at least I will be short oriented, okay? And the first area that we need to break obviously is this area over here. So we need to break we need to break below 15,100. When we break below this area, that's where I will be looking for some short confirmation, and I'll start opening some short trades. So to recap, we created a double top on Nasdaq 100, and I do believe that we're going to continue going down to 14,200. This, I've been talking about it in every single video, right? I do believe that next week is going to be make it or break it week, because we have CPI incoming, which I'm gonna talk about it later. But if we break to the downside, we are gonna go end up first at 14,670 and then 14,250, okay? And I would advise you strongly to think twice before start buying again. I'm gonna go over bull cases and bear cases a little bit later on, so you always need to think in both probabilities. I will be still short oriented on Nasdaq until I see a bigger pullback, and until I see a nice correction, because this at the moment makes no sense. Okay, so Nasdaq 100 start selling somewhere in this area, 15,260 all the way down to 14,900 first, then 14,700, and then 14,200. So this area over here is still good area to short Nasdaq and to ride it all the way down. Okay, now let's move on to Bitcoin. The Bitcoin weekly chart showed us some strength, but then it just stopped. Then we had this bearish candle over here that ended up our week in red. And honestly, right over here is the accumulation area. So if you want to buy Bitcoin, okay, it should be in this area over here, right? So if you want to buy it, you need to do it here. If we break to the downside, I do believe that we're going to break only until maybe 28,600 the most, just to catch some liquidity and then continue going to the upside all the way to 40,000. Of course, it's not going to happen overnight, but slowly I do believe that this is still good time to buy. So all these pullbacks are good, and as I already told you, you can even trade it in this range over here, right? And then just boom, break out to the upside. So if we break below 28,700, I would be a bit worried, because that would bring us back all the way to here. So we would need to retest then this 25,000 area if we break up below the 28,700, and that wouldn't be really good. That wouldn't be a really good sign. That means that we would be making a double top, same like on Nasdaq, and that would be kind of bearish sign. So as long as we are between 32,000 and 28,800, as long as we are between this area on Bitcoin, right, that is good. You still have time to buy, and you can still profit off of the next bump that I do believe it's going to happen. So as you can see, this is clear liquidations and big wicks on the Bitcoin chart. I think, as I already told you, the biggest leg down that would happen is just a liquidation grab to 28,700, just to continue all the way up. So be careful. Your stop loss if you're gonna long Bitcoin should be somewhere at around, let's say, 28,000. area. And then of course take profit should be at around whatever you want, 35, 36, 40,000 area. This is a big swing trade, so this is not a day trade. For day trade, to be honest, I wouldn't. For day trade, actually, I would maybe do it something like this. I would maybe trade somewhere this range over here. So for day trades, you can buy somewhere in this area of 29,500, ride it all the way to 31 and back, right? So this range over here. This is for the day trades, okay? Now, let's move, let me just delete this and let's move on to the next week's economic calendar, okay? So next week's economic calendar is bringing us some important reports. On Monday, we don't have much. We have some FOMC members talking, and that will be pretty much it. But then on Tuesday, actually on Tuesday as well, we don't have much. It's just a short-term energy outlook, which will affect oil and energy, I don't know, prices. Wednesday actually is a big day. Wednesday, we have CPI report, inflation report. So we will be looking at core inflation first of all, okay? So core inflation and the CPI itself, all right? So this will be two very, very important reports that we want to see. Is the inflation coming down? Is the inflation cooling down? This is what the Fed will be looking at. This is what the entire world will be looking at. If the inflation report does not come lower than expected, if it comes the same or even, God forbid, higher, it's going to be very bad for the markets. That's why I said at the beginning, it can make it or break it. So if the report CPI doesn't come lower, because now the expectations are only for it to be showing lower. Actually, now it's just like it's been priced in the market that every single CPI will be printing lower. And if it doesn't, it's gonna be very bad for the markets, okay? So look for the CPI, core CPI and the CPI itself. Is it going to be lower than 4%, okay? Then we have again Fed member speaking, crude oil, we don't care, and some other reports that we don't really care about much, all right? And then on Thursday, we have initial jobless claims and PPI, producer price index, again related to inflation. And again, PPI as well will have to be lower than expected because, as I said, the market already priced in that the inflation is just going down, right? Because remember, Fed was very bearish and they clearly said, we want to see continuously inflation going down. If there's just at least one report that shows that it's still sticking around, that will actually be bad for the markets, all right? So pay attention to CPI, PPI, and initial jobless claims as always. And then on Friday, nothing much. Export-import prices, Fed balance sheet, so basically the most important days are going to be Wednesday and Thursday. Now, earnings calendar, officially Thursday and Friday. Thursday because PepsiCo and Delta and all these big companies start reporting their earnings reports. But Friday is actually unofficially start of the season because you have the big banks, JP Morgan, Wells, BlackRock, Citi, etc. reporting their reports. What does that mean for the market? This is what I wanted to talk about when I said there's always two scenarios, bullish and bearish. So let's just go back real quick on the NASDAQ chart just to tell you what I thought. So the squeezing triangle story that I was telling you, right? If these banks and if their earnings reports continue to be very good, okay, or good, we can still keep up the momentum. Yes, I would not like to see NASDAQ going to 16,000, definitely in this environment as I've spoke about it, but there is a chance if the earnings reports are good. There's literally nothing stopping us, sorry, let me just delete this. There's literally nothing stopping us going to whatever, 16,000 if the earnings reports are really, really good. Now, I will talk about it a little bit later, but we can do something like this if the earnings reports are really good. Like easily we can continue the bullish momentum and we're gonna be in a full-blown bull market and, you know, break the previous all-time highs. Now, the thing is, okay, that, let me just go back to the news. The thing is, and I will go over it later, this earnings season is expected to be very bad, all right, in comparison to the previous year. So if the earnings report actually fail to show strength and if they actually if the companies start missing, this is going to be a period of what I said we're gonna see big cleansing, all right? We're gonna see the AI bubble burst, we're gonna see the cleansing of the market. However, on the other hand, if they continue showing good results, market will just pump. So pay attention Thursday, Friday, look at what these big companies are saying, look at their guidances. Guidances are the important part, because market is pricing in those, okay? Market is always pricing in the future, what they say they will do and what they say they will how much money they will make. Now let's move on to some news. S&P, now this is just related to the previous one, is S&P faces moment of truth as Q2 earnings season kicks off next week. Wall Street second quarter earnings unofficially kicks off on Friday, as I said. Analysts expect minus 6.8% yearly profit decline and a decrease of 0.4% in revenue growth. If confirmed, that would mark the third consecutive year-over-year decrease in earnings and the first drop in sales since Q2 2020. Now, pay attention to this, guys. This is what we spoke about in one of the previous videos, when I said that they had the higher standards for earnings reports, and then they just keep lowering the bar, until everybody gets to meet their expectations or exceed, right? I believe that this expectation of minus 6.8 is overly bearish, okay? It's just too bearish. Now, what is happening to the market when we actually have these huge bearish expectations? If they meet or exceed these expectations, the market will explode. So the logic is, if the reports aren't really terrible, everything better than really terrible, market will price in higher. Market will go crazy about it, be euphoric, pump it, etc. Right? So if we want to see a big leg down, as I would like to see, the reports really need to be bad, like they predict they will be. So the reports really need to be terrible, right? Everybody the big companies need to start missing their earnings reports. If you see big companies start missing the earnings reports, Tesla, BlackRock, this and that, that means that we're going to have a very bad time until the end of the year. So you need to be ready for that. But again, on the other side, as I've already told you, if they're actually better than expected, market will just take it as another pump and go crazy about it. We saw what happened with Nvidia in the previous earnings reports, how it bursted out and we had this huge AI bubble. We had this big leg up of 1,000 points. Again, let me go back to the chart. So basically, this over here happened. I think, yeah. This leg up over here happened after the Nvidia reported their earnings report and after the AI hype. So basically from 13,200 to 14,500, this was all just pure AI hype and pure AI speculation, etc. So let's move on to the next crypto news, right? Crypto exchange Binance hit by executive exodus. A string of executives have quit Binance according to their tweets and media reports, the latest blow for the world's biggest crypto exchange as it battles a slate of legal and regulatory headaches. Okay, so Binance, as always, is the first one to get to be the target, right? For everything, whatever is happening, they're the first one to be attacked. Now CZ, as always, just tweeted his famous 4, and he said, more FUD about some departures. Yes, there is turnover at every company, but the reason dreamed up by the news are completely wrong. As an organization that has grown from 30 to 8,000 people in 6 years, from zero to the world's largest crypto exchange in the last 5 months, blah blah blah. Basically, it just goes on to explain that it's normal that people leave at every single company and that it happens at every big company, right? That you have a turnover, that you have a change of management, and yes, you know, they keep building, etc. So basically, it's just giving an explanation that there's no reason to be feared for Binance. And this I just wanted to share with you because, you know, Binance doesn't get a break, same as crypto didn't get a break the whole previous year, right? But now there's some good news. ETF approval may boost Bitcoin's liquidity, but it won't be a game changer. This is as per JP Morgan, part of their global market strategy team. This guy, I cannot even pronounce his last name. He believes that Bitcoin ETF would have similar impact as those seen in Canada and Europe, where spot Bitcoin's ETF has been around some time. But that doesn't matter, okay? Like, boost liquidity, whatever, it's going to do good. The important part is this, guys, okay? This is the important part. And Michael Saylor, of course, shared this. Bitcoin is an international asset. Larry Fink BlackRock CEO Larry Fink, if you haven't seen it, probably you did if you follow crypto, he went on a rant and talked about Bitcoin and ETF and the filing of DTS and how they changed their minds. And he actually compared Bitcoin with digitalized gold, guys. This is big, this is huge. Big players are back in Bitcoin, and I've already told you 120k is minimum that we're going to see, okay, in the next bull run. For if you ask me, I don't know if it's gonna be halving, before halving, after halving, what's gonna have the biggest impact, I don't know. I know one thing, that when a guy like this says something like that Bitcoin is an international asset and it compares it to digital gold, you listen, okay? You pay attention. So you need to read those statements and know what they're doing and look at their actions. I spoke about it in a previous video. By the way, Fidelity, BlackRock, all these guys selected Coinbase as for their SSA agreement, shareholding, whatever it is. So we're gonna see how that will develop and what the SEC will say. Now, if the SEC has some bad news, it might be short-term bad for Bitcoin, but long-term, as I already told you, just keep buying, just keep accumulating, okay? Now, just to give you a little bit of a recap, right? To sum it up, to sum everything up for the end of this video. At the moment, stock market is overextended. We need to see a little bit of a break. That break will happen if we have bad earnings reports. Job data remains very strong. Fed was very bearish, okay? So we still are expecting that drawdown. This, what happened the last time, was not a drawdown. As I already told you, that was a fake pump to trap more longs or to trap more buyers into the market. It's just a typical thing to grab liquidity for the next leg down. As for the crypto, we see that BlackRock and the big players are back in crypto and they will be leading the game in the next bull markets to come. So maybe not in this one, but maybe in next one or something, it's going to be a game changer. And I do believe that Bitcoin will reach such a high price that it will be unimaginable and unobtainable for people anymore, okay? So get in while you can. Start accumulating slowly by little. Don't go too crazy about it. Don't over leverage and don't use leverage at all. Just do some spot buying and that's about it. So guys, that will be all for this video. Thank you so much for watching, and as always, make sure to like, subscribe, and I will see you next one at the same time. Peace.